Yes, you can tell from the title of this video, we're going to be diving into these major tech stocks earnings that just took place. Technically, ASML's came out a little earlier. They came out before the stock market opened today, but the rest of them, they were just released. Most of you are watching this the next day, so yesterday night. So you're going to see some movement in these stocks particularly, but we're mostly going to be looking at just, okay, this is what happened with the business and what we should be doing from a long-term investment standpoint. And of course, feel free to skip around in this video if you have only specific ones you're interested in, which is most of you. So go ahead and do that. But ASML, the first one we're looking at, I own ASML. I like ASML quite a bit. They're very, very, very important to the semiconductor industry. They fell quite a bit after the DeepSeek thing. But if we're just looking at specifically what the company did, 9.26 billion euros versus 9.07 expected. So they beat. And this isn't that unexpected. When the last quarter happened, I covered it briefly, although almost none of you were subscribed to my channel at this point. They guided worse than what people thought, but it was still like a 8 to 10%. I think it was somewhere, 7 to 15% ish from what I recall. They guided higher than they ever had before. So the fact that they're beating marginally isn't that shocking. I kind of expected them to do it, but it's still a good thing. And then they had a little bit more net profit. But the main key thing people are really excited about, maybe they didn't guide incredibly, but the bookings. ASML said that net bookings, a key indicator for demand, came in at 7.09 billion euros. That was up 169% from the 2.63 billion euros ASML reported in the third quarter, exceed the 3.99 expected. So that's very, very good. Up 100, if you're up 169%. So that just tells you that looking forward, that there's probably going to be a lot of sales going forward than expected because people are booking. So even though it's booked and say, hey, we're going to buy this, technically doesn't count until it's actually fulfilled. But that's a very, very strong indicator for the future. I'm not shocked. I think ASML is going to continue to do well. Its PE is really not that high right now. It really isn't. Went back was over 1,100 a share. Yeah, that's a bit high, but this company has one of the largest moats that you can find in tech. Like, full stop. They're going to do well, whether it's this next year or the year after, or 3 years or 5 years. This is going to be a stock. In the long term, that's going to do well. Unless something really, really weird happens, unless leadership just starts sucking. But even then, you'll get a Boeing situation where it'll probably ride flat just because they have such an important thing, right? Such a large model. You can't just make airliner jets, and you can't just make these lithography machines. They're just so complicated. So this article indicates that Microsoft really didn't have a good earnings, and I somewhat disagree. Yes, we would want guidance to be slightly higher, but they beat pretty significantly this specific quarter. You can see earnings per share at 3.23 versus 3.11, revenues 69.63 versus 68.78. So not terrible, really not terrible. It fell 4% in after hours trading, 4.5. As a long-term investor, is there anything super concerning about this? No. So guidance was somewhere between 67.7 and 68.7, and people were expecting 69.7. So you were missing by what? 2 to 4%? Really not that much, but the key thing to me I'm seeing is you're seeing a growth in cloud. You're seeing a growth in cloud that's pretty dramatic. The company's intelligent cloud segment, which contains the Azure cloud, contributed 25.54 billion in revenue. That was up about 19%. 19%, yes, even though it's a tiny, tiny bit below what we were expecting. Then it's still high. 19% on that. That's a high margin business. That's the one they're pouring most of their money into. And you're seeing, if we go down here, this kind of shows, okay, products and growth services. You're seeing some things that are in the single digits for growth, almost a negative for the Windows OEM and devices. And you're seeing a lot more for the cloud stuff. And that's not surprising. When I did my breakdown of this company, you can hear me say it. I said they're focusing on, I think so. Maybe I'm crazy. It's very similar with a lot of the Mag 7. I know it is with Meta. Meta's putting a lot of money specifically into their higher margin businesses, into their advertising, things like that. Their AI stuff, all these companies are. Google is as well, Microsoft is as well. It's not that surprising. And you are going to see a higher focus on these higher profit margin businesses, which is the cloud segment. So the fact that we're still seeing 19% year over year growth in this segment, which is higher margin, it's very, very impressive. It's very, very good. Yes, we're sitting at a point in history where 19% year over year revenue growth in that particular thing is quote unquote disappointing. It's not disappointing in my opinion. If you're looking at it from a long-term output, if they can get anywhere near 19% growth in cloud long-term, this is going to be a company that's going to do phenomenal. So, and even here, revenue from Missouri and other cloud services jumped 31%. Oh, it's down from the prior 33%. How sad. Down only 31%. Wow. I don't know, guys. You can spin it however you want. As a long-term investment, yeah. Is this going to pop tomorrow? No, it's not going to pop tomorrow. But if you're looking for a pop tomorrow, you should probably, I don't know. I'm not a short-term investment guy. Never have been. I just don't get it. So if that's your thing, I'm not dissing you at all. But from a long-term investing standpoint, the only thing I'm seeing here is your key businesses that you actually truly care about. You're pouring your money into AI, the cloud, the Azure. That is doing fine. And you're doing some other things that are lagging a little bit. But those are the lower profit margin businesses anyways, and they're not the one Microsoft's truly pouring a lot of money into. So I think this is a fine earnings. Is it like a crushing earnings? Like, yeah. No, but it's really fine. Tesla is a good example of even when your earnings are bad-ish, they aren't. This was not a great earnings. We're going to dive into it, but the share price is up 4%. And Microsoft had an objectively better quarter, in my opinion. But needless to say, it all bakes into what is the perception of the company. Long term, if we're talking 3 to 5 years, the share price is going to reflect how the business is doing, roughly. Of course, you may end up in a place where people are judging it differently, but long term, how the company does is how the share price is going to be reflected. Right now, people don't really care what Tesla does in the short term. They care about that robotics. They care about the innovation. They care about the what do you call it? The taxi, the self-driving taxi. That's not the word, robo-taxi. That's what people care about long term. That's why they're in Tesla. So, of course, when they haven't met earnings, people don't really care, despite what the PE is. So, let's take a look. You were slightly under for earnings per share, although when we're talking about 73 to 76, that's actually not an unsubstantial gap. They missed a little bit, and they missed bigger on revenue. 25.7 instead of 27.26. You saw a decrease in margin. You saw a decrease in operating income. It's not terrible. It's not terrible. And it's not terrible primarily because you understand that you can only sell so many cars as Tesla. That's always why people have been dissing Tesla's valuation long term, because it's like, okay, well, we're selling 450 whatever thousand vehicles every quarter. You can only sell so many. You aren't going to be able to sell 100 million cars per quarter. There's not enough people, right? It's always, there's a ceiling that's capped. But with Tesla, if they develop the self-driving software and they rent it out to other people, if they get robotaxi, if they get this, if they get that, it's about the innovation side of things. So in my opinion, the valuation of Tesla really has nothing to do what in the short term what they do, but how they can company. And you can see it's even said in the statement here. Musk has been telling investors in recent quarters to focus less on the core business and sustain more on a future autonomy and robotics. So honestly, yeah, is this a great quarter? No. I mean, what, 495,000? It's fine. It really is fine, and it honestly, it really doesn't matter. So if you made it this far in the video, you're in one of two camps. You either really are interested in Meta's earnings, that's why you skipped to this part, or you've listened through all of this and you probably just care about what I have to say about these companies specifically. So if you're in the first camp, sorry. If you're in the second camp, this is kind of probably going to be right up your alley. I absolutely hate how all these articles are formulated. I do, because they try to spin it a certain way. I hate that. I hate it. Just give me the numbers, bro. I don't care what your opinion is. And you can see it because Microsoft or some of the other ones, it's like, oh, it's negative. And then this one is Meta shares pump after company beats. They're up 2%, right? 2% after hours. That's not much. And they beat estimates. It's like, oh, this company missed, or their guidance isn't that good. I think it's Microsoft one we just covered. Microsoft guidance not that good. Literally, it says down here, right? Right here it is. Meta said it expects first quarter revenue to be between $39.5 billion and $41.8. Midpoint of the figure trails analyst expectations of 41.7. Yes, I know Microsoft missed a little bit, but they could say in this title, Meta shares rise slightly despite the fact that they missed guidance slightly. Right? I hate that sort of stuff. I hate it. It annoys the heck out of me. But anyways, ignoring that part, Meta had a good earnings. I own Meta. I like Meta. And it's really pretty good considering when I did the deeper dive into this company, if you've seen that video, they really are pouring a lot of money into this company. They're pouring a lot of money. They're borrowing money. They're building up some debt. They didn't have any debt. So I wouldn't even be surprised. The fact that earnings per share is that high is a very, very good thing. And they beat significantly this quarter, 8 versus 6.77 expected. Revenue was higher. And also that shows you, okay, their profit margin jumped pretty significantly because you beat slightly on revenue, you beat dramatically on earnings per share. So it's really interesting. Sales in the fourth quarter jumped 21% year over year, while net income grew 49%. That's not sustainable, but I'm not complaining. That's great. If we can get similar margins like that with the revenue that we're even projecting, that's good. So their AI chatbot did good, yada, 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 yada. It's fine. Yeah, no, it's interesting. It seems like some of the investment they're doing is paying off, which is very good. But yeah, no, this is a good earnings. This is a pretty solid earnings. If guidance was just a little bit higher. But like I said, they beat pretty dramatically here. Same thing goes with Microsoft. When these companies guide fairly conservative and beat, I think they like to do that. Because we see Microsoft. Companies don't like to miss. They don't. So usually they do it slightly conservative. You can see, looking back, okay, how many times they have to beat. Let's just Google it real quick. Who cares? Off the cuff. Meta earnings. Beat, 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 beat. Beat, 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 beat. Beat, 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 beat. They like to aim a little low. So the fact that we're right in the estimates thing, 39.5 to 41.8, analysts will probably put it right around that 41 mark, maybe 41.5. They'll hit 42, 42.5 if it's a standard quarter. So this is a solid earnings for Meta. We just hope to see the money they invest in continues to produce the growth that they're having. And if it does, hey, we're going to keep making some good money. So anyways, if you made it this far, I appreciate all of you for watching. Like and subscribe if you're new, and I'll catch you next time.